What is going on with the Denver metro real estate market? Hey, it's Sean Reddy, Keller Williams Reddy Group. Each and every month, we take a deep dive into 9 key health metrics of the real estate market in the Denver metro. We look at month-over-month changes, we look at year-over-year changes, and we look at a longer time horizon too to see, how does this market stack up with the last few years? So let's dive right in. If you've seen this before, all these metrics are color-coded, meaning if it is a metric that moved in favor of home sellers, it's in the green. If it moved in favor of home buyers, it is in the red. And you can see lots more red than green this month, and we'll talk about that. But the whole reason we put this together is so that if you are in the real estate market as a buyer or a seller, or you're doing both, or you plan on entering the market, you can use this data to your advantage. So let's discuss. Biggest mover of the month goes to median days on market falling by nearly 8%, going from 38 to 35 days doesn't seem like much, but it is by percentage the biggest mover of the month. The most surprising statistic, at least in my opinion, is new listings taking a 7.6% jump. We had seen so many months in a row of new listing count coming down, yet in September, I guess everyone put the kids into school and listed their homes, so 7.6% jump in new listings. The anomaly of the month is, remember that 7.6% rise in new listings, couple that with a 6.5% fall of new purchase contracts, meaning homes that went under contract in the month of September. You would think, given those two moving in opposite directions, that would increase the total inventory on the market, when in fact the opposite happened. Total inventory fell by 1%, 1.06 to be exact. And as of October 1st, there were exactly 14,000 homes on the market in the Denver metro 7-county area. So 3 straight months of inventory dropping and 4 straight months of closed sales dropping. 3.9% drop in closed sales this month. Prices also took at least the average price took a pretty sizable hit. Now remember, this is not necessarily indicative of values across the board, but it does measure the 3,500 plus closed sales this month versus the 3,600 plus closed sales last month. Takes the average price, and in September, that average price did fall by 4.43%. Median price, more indicative of overall values, also fell for the 3rd straight month, this month down by 1.13%. Average days on market in the yellow, it stayed exactly the same, 54. But what also fell for now a 2nd straight month is this metric here. This is what I call the leverage factor. It measures the median sold price compared to the median final asking price. And it dropping by nearly 1% tells me that buyers are out there hammering better deals compared to final asking price. So that's a month over month look. Let's take a look at what the year over year numbers tell us. We don't want August, there we go. All right, almost a 50-50 split between seller favoring and buyer favoring metrics here. Now the biggest mover year over year is once again inventory. Even though it fell again for the 3rd straight month, it is sitting about 17% higher than this time last year. So buyers, you have choices. The average and median days on market, so total market time between a home launching on the open market and going under contract, it's up about an aggregate of 17% between the average and the median. So it's taking longer to sell homes, there's more homes out there, that all checks out. New listings fell by 1% year over year. And again, this is just measuring September of last year to September of this year. So it's not a year to date kind of thing. New purchase contracts down by 3.7%. Yet check this out, closed sales up 8.1% year over year. So many, we'll call it 250, 270-ish more closed sales in September this year than last year. Do have year over year price increases. The average price up 3%, median up 1.5%. And the leverage factor that I previously discussed is down nearly 1% year over year. So again, trend is buyers negotiating better deals than the last asking price. All right, so what does this look like on a longer time horizon? We're gonna take a look at and this is for my visual people here. All right, so got this tracked all the way back to August of 2022. Why August of 2022? Well, that's essentially when the market started shifting out of its COVID boom, as interest rates were starting, or the increase in interest rates were starting to take more of a hold of the real estate market. So got about 5 or 6 different visuals here to walk through, just from a perspective standpoint, what this actually looks like. First one here, this one's gonna tell you average in the blue, median in the red, days on market. And the only thing to point out here is it's completely cyclical and seasonal, we'll call it. They always spike in the winter months and bottom out in the spring months, no different this year. Started seeing that upward trajectory, but check this out. Last month, the little break in that typical upward trajectory. So we'll see how that tracks out, but I would venture to guess that we're still gonna see increasing market times over the next 3 months heading into the winter. All right, this one, a little more complex here. Got 3 measures. New listing, so I'm gonna start with the red, available homes in the red. So that's total inventory on the market, again, in a 7-county area. And you can see how that's had its ebbs and flows, but obviously a multi-year high this year, touching over 15,000 at one point, has since come down then. Do expect that to continue to track downwards as we get into the winter months, yet the ceiling has been raised this year. Of course, with, 18% more inventory this month than this time last year, that'll happen. New listings are in the blue and new purchase contracts are in the yellow. So what I want to point out here is, if let's say you're a seller on the market and you're like, hey, why is my home not selling? You have a lot more competition. This spread between the red line and the yellow line essentially indicates the competition that you have. Those are all the homes that are on the market versus, the 14, 15,000 homes that are on the market versus the 4,000, 3,000 that sell in any given month. That is the absorption rate. So if you have a big gap like you do right now, it can cause some sellers to feel like the market is slow. And fact is, nearly half of homes that have hit the market in 2025 have not sold. Believe it or not, literal coin flip to list your home for sale and actually expect an outcome. So something to remember, especially as it pertains to some of our programs like the no fail sale guarantee, backed by upfront offers for the home, so you can have 100% certainty in your home sale. All right, so anyways, big gap between the yellow and the red. However, the yellow's not zero, right? Homes sell every single month, so don't get it twisted that the market's at this complete standstill, because you still have 3,800 homes plus go to contract last month, and there'll be another 3,000, 3,500 plus in October. In fact, it bottoms out usually in December. 2,600 last year, 2,600 the year before, 2,500 the year before that, and then it'll start its springtime increase. Closed sales, ups and downs. Yet over this longer time horizon, it's not as much of a downward trajectory as you'd expect. But that trend line is heading down. It will bottom out in January most likely, and then start to shoot back up again next year. This one measures average price in the blue, median price in the red, and it does take a look at it from a what sold in each month standpoint, so it's plotted out accordingly. Yet, main takeaway here is, there is some recent downward trajectory, but across the board overall in this 3+ year time horizon, it's not as downward as you might think if you get your real estate news from national media outlets. Finally, median sold price to list price ratio. Again, this is what I call the leverage factor. If you see numbers in the 99, 100, 100 plus range, that means it's a more competitive market, more buyers out there. If you see that dipping down into the towards the mid 90s, I think the lowest on record here, 97%, then buyers are striking more deals compared to last asking price. So definitely some peaks and valleys here, but relatively flat between 98 and 100%, with some outlier months here and there. So anyways, there you have it. That's what's happening in the Denver metro market. Again, if you're in the market now as a buyer or seller, or plan on entering the market anytime soon, and you want to talk about how to use this data to your advantage, and let's say you don't have a trusted professional that is this in tune with the data, let's talk. Love to have a conversation, whether we end up working together or not. Here to be a resource for you, and just want to help. So hope you enjoyed it. We'll see you next month. Thanks for watching.